trader. I'll take any questions you have on the markets. Just waiting for people to check in here. Peter, are you on the line here? So I know there's always a bit of a delay between when I start talking and so we've got Eunice just joined. Hey, Eunice. So I'll just wait a moment, let everybody. We got Gustav. Hey, my man. How you doing? What are you guys trading today? We got Rahul. We got Ajike. I don't know if I'm pronouncing it right. If I'm not, I apologize. How you doing? I saw you yesterday. We got Neil from the UK. Welcome, Shabam. So what are you guys into? What are you guys up to? What are you guys trading? Euro US dollar. Yeah, so I think a couple days ago, or actually for the last several weeks, I've been telling our members or suggesting that they start bailing out of their technology stocks. That I thought that the Nasdaq was basically done with. It had hit a major peak. I saw a Q reversal, which is just a price action where a market makes a new high and close on the low. Now, this was a weekly key reversal about 3 weeks ago, but it was at the top of an ascending, broadening price pattern. Now, I'm going to do live training session tonight where I go into the market live. It's always difficult to describe these things visually, but I'm going to go into the markets live, show you what I'm looking at. And so we peaked up there. We dropped like a stone from 334 to under 300. And now we've kind of just been vacillating between 300 and 320, but very large range days. And to me, when I see these large range days, to me, this reflects a lot of uncertainty in the market, a lot of vacillation, a lot of uncertainty. And usually that uncertainty precedes a change in direction. So the Nasdaq has been going higher. And now I see some patterns that suggest that we're going to go lower. And we took out yesterday's low today. So it's going to be very interesting today. We're just kind of dancing on the triple Qs right now between 315 and 317. But if it takes out that 315 level, watch out. And especially 310. Anything under 310 and it's going to be a good night. So Gareth says, I've got VIX calls and QQQ and S&P puts. I think that's going to be a good position for you, Gareth. I think that's going to be a winner. Roland wants to know about Bitcoin. Bitcoin, is a bit of an anomaly. It's a parabolic market. It's gone from 5,000 to 60,000. So if we looked at any other market, we would say that looks, like it's gotten ahead of itself. But, it's a different animal. Everyone says it's always different this time. We'll see. So a couple of weeks ago, it set a high at around 57,000. Then it dropped to 42,000. Then it made a new high at 61,000. And it's just now, if it consolidates this high, it's very healthy. If we go and crack that $42,000 level, then I think that it would be a concern. But it's, just hanging out right now. So I'm just watching these, triple Qs rather nervously. I'm pretty short. Famous says, how long did it take you to become a profitable trader? There's a couple of answers to that. So I think I always had a good instinct for the markets, but I had to control my demons, and I think that was the biggest challenge for me. So right out of the box, I was making money, but then I would get overconfident, bet too much, and lose too much, and it took me a long time to kind of figure out this process. And now, I've, just evolved a 4-step trading methodology, really as a firewall for myself. I kind of first, developed it for myself to kind of create a disciplining mechanism. And then, when I thought it worked for me, I thought, other people could benefit by it. And that's when I started the Pattern Trader. So we have a 4-step trading methodology. First, you have to identify the phase or the condition of the market. Is the market going up? Is it going down? or is it, reversing? And this is really where I make most of my money. When a market goes in one direction and then out of nowhere it just goes somewhere else, but it's not really out of nowhere. There's always some chart pattern or always some price action that precedes. And I think the best example of that was the triple Qs, 3 weeks ago, February 19th, when they were 334, right at the high, all-time high of the Nasdaq. Why was I shorting it? Well, I was seeing a pattern already developing, and I've been trading so long now that I can kind of see these patterns in my sleep. So I can see them actually before they develop. So when one market goes and makes a bottom, bounces off, and now is going to go down and make the second bottom, I'm already anticipating that it's going to make that second bottom. I'm already getting in there. So when it turns, I make so much money just on that initial push. So I think that's really my strategic advantage, is to understand where markets turn. So either we have a trend that's going one direction or another, and you figure out ways to get in that. That's kind of a no-brainer. But if it's turning, then it takes a little while to turn. Like, I think the pound New Zealand dollar is turning higher now, but it doesn't do it all at one time. It's just been a grinding affair, putting you to sleep. You need Dramamine to follow this freaking thing. But eventually, I think pound New Zealand is going to be 10 handles higher. So anyhow, I think Anna Hackett says psychology is the key. So yeah, I mean, this market's all about discipline. It's like anything else. It's not enough just to have talent. I don't care if you're a chess player or a tennis player. You have to have the mental fortitude and the discipline, right? They don't just hand this stuff to you. They don't make it easy. So right now, I thought the Nasdaq was going to drop. It's starting to get some support here, and I'm a little nervous here, although I do think that the bigger patterns project, but you've just had such enormous ranges back and forth, banging each side of 310 to 320 on the triple Qs. Baron says, have you ever experienced a divergence in the index where the Dow and Russell continue hitting and the Nasdaq looks like it's ready? Yeah, so I call that actually a bearish divergence. So that's actually what's happening now, where you see the Dow moving to an all-time high again today. The S&P's kind of stalled out, and then the Nasdaq's way lower. And so the Dow and the S&P went to a new high recently, but the Nasdaq's been trading 5-10% off its recent high 3 weeks ago. So I call this a bearish divergence, where the two highs of the S&P and the Dow are not confirmed by the third index. Now it's a question, does the third index catch up to the other ones, or does the Nasdaq pull everything down? And I'm kind of thinking the latter right now, although we might still need to go to 4,200, 4,400 on the S&P. The S&P is also trading within this ascending, broadening price pattern. And it looks like it's topping out here. It has a double top, but it may also have one more thrust to 42, 4,400, and then that would be it for a while. And I think when these things top out, you're going to see a big drop, 20% or more. So I'm kind of banking on that big drop. So X says there was a head and shoulders on the Nasdaq. Yeah, there's a. So that's the thing. There is a head and shoulders in the Nasdaq, and we kind of thrust below the neckline. The neckline was around 310, I guess, and we got to 300, and then we poked back up, and now we went to 320. So some point, we see these chart patterns, and either they're valid or they're not. Meaning, if a head and shoulders is valid, market should start going down. But if the market just keeps not going down and keep going higher, then it's going to bust the validity of that pattern. And it was an open question as to whether that was going to occur. But I just every day I say, trust the picture, trust the picture. And what I mean is that I make all of my decisions based on a chart pattern. And we do have a head and shoulders bear pattern in the Nasdaq. We do have an ascending, broadening price pattern. We just tested the lower level of the ascending today. And so I said this was a zone of opportunity, that test of that support line of the ascending, that if it went there, that would be a short opportunity. And, we went there last night, 323. We've come off. We're just vacillating right now. I'm kind of watching it. I want to see this thing get going to the downside. If it's, every time it goes down, it kind of comes back up. So I do think we're going to come off. And this is just the dead zone right now. Between 11 o'clock Eastern time and 1 or 2 o'clock, it's kind of a dead zone where the market just goes back and forth. And then the market does its whole move, 20 minutes before the close at 4 p.m. Eastern time. So, I'm just keeping an eye on this. It's just bouncing between 315 and 317 right now. But if it takes out 315, then I think it's going to really, there's going to a lot of dead zone below there. Roland says, I have 10K in my account, but I'm only trading 0.5% risk per trade, and I only trade on the day, week, or month charts. Am I right or wrong? So I think you're absolutely right. In this business, Roland, the tortoise wins the race. So I think, again, it's not everyone romances trading as, if I just got in at the right time, the right move. And that's not what trading's really about. It's all about the risk and the reward. So how much are you risking? How much are you betting on each trade? So if you're risking 2, 3, 4% on each trade, a set of 5 trades can, put you in the whole 30%. And then if you're down 30%, you need a 50% move just to get you back to even. So it's all about risk management. So I would say if you take a 0.5% risk per trade, there's just no way you're going to get blown out unless you just, don't know what you're doing. And if you don't know what you're doing, then you shouldn't be in this game anyways. So if you're risking 0.5% per trade and I send you 10 bad trades in a row, you're down 5%. And then the next trade, I can make 20%. So people always ask, well, what's your winning percentage? Well, that's irrelevant. I don't care. I lose all the time, over and over again, but it's the quality. So I really just focus on, 1 or 2 big moves a year, that make my year. Now I'm trading all the time, and I'm taking pot shots here and, little shots there. I'm trying to carve 150 pips out of this or that. But when I see something line up like the Nasdaq, then I position with both barrels and I look to stay in the position and have it work for me. And, right now the Nasdaq's getting kicked in the teeth as I'm watching it. It's now going back down to the lows. So I think this is going to be one of the biggest down days, in a long time. Probably, today and tomorrow. You're going to see I think the chickens are coming home to roost in the Nasdaq. You're seeing huge over speculation. There's huge complacency. I think there's a misguided notion that the Fed has got your back here. And yesterday, Powell kind of confirmed that. He said, man, I'm never going to raise interest rates again in your lifetime. I don't care what the market tells me. 10 years at 1.7 now. All of these, investment grade bonds, corporate bond indexes that I'm looking at, like the LQD and the HYG, they're just getting kicked in. And they're telling a story that there's going to be a corporate horror show coming soon. There's a lot of zombie companies out there that are walking around that, should have been exposed. But, we have such a friendly Fed that they're letting these, zombie companies, which should go out of business, stay alive. So Anish says, isn't a 0.5% stop loss too low? No, I didn't mean, it depends where you put your stop loss, Anish. So the percentage, does not mean that you have a small pip take a stop loss. So I could have 180 pip stop loss in a currency pair and still equate that to a 0.5% risk on my account. All that means is that you're going to reduce your position size. So 0.5% risk does not correlate to your pip risk. So let's say I wanted to short the Nasdaq here. It's at 316. I want to risk to 320. That's 400, triple Q points. So I have to calculate what is 400 points equate to in my account if I take a 0.5% risk. And then I just dial down the trading position to make sure that even if I get stopped out at 320, 400 pips, I'm only going to lose 0.5%. So we should be ready to rock and roll here. The low on the triple Qs is 315.30. We're trading about 100 handles higher right now, 316.30. But, give it 10 minutes, and I think we're going to be making new lows. So Anish says, thank you. Got it. You're welcome. So Anish says, you sometimes call 2 consecutive candles a double bottom. In that case, I can find double bottom in infinite cases. I don't. Yeah, so look, the market throws you patterns all the time. You see double bottoms all the time and double tops. And so that is the trick of being a trader, is to choose which ones are real and which ones are not real. And I think that's the value that I bring to the pattern trader. I've been staring at these freaking screens long enough that I think I know where the potholes are in the road. So I think I understand very well how to capitalize on an opportunity, but I also know how to avoid bad situations. I know where there's traps in the road. Like gold yesterday, there was a key reversal last week. I said gold was going to go higher, but not much higher. In fact, on all of my live webinar sessions this week, I said I would sell gold at 1750. Guess where it got to last night? About 1752, and now it's like 1720. So, yeah, you're right, Anish. You see these bottoms all the time, and it's just incumbent on how to distinguish one from the other. Let's see. Lamar says, I came in late. VIX has collapsed to the lowest it's been in a year. Is this another sign of an imminent collapse? So, I think the VIX does indicate a complacency. It takes a little while for the VIX to turn around. But yes, I do think that it's a complacency indicator. I think people have gotten very comfortable just making profits. Since last March, I don't think we've had a down day, week after week after week after week. And I think that this is just building a ridiculous bubble that is about to be popped, certainly in certain stocks. So, my live webinar sessions, let me put that link in the box here. It's I'm going to do the last session tonight. So every day at 4 p.m. Eastern time. This week I've been doing live sessions. I'm going to do the last one today. Go to the link, sign up, and I'll show you exactly what I'm looking at on the chart. So when I'm kind of talking about the Nasdaq, it's kind of hard talking in absence of showing you the structure. So to me, what I do is I take price and I put a boundary around it. I put structure so that I can understand it. And then I see how the market moves within that structure. And then, I defer to the market. So for instance, if I see a head and shoulders like the Nasdaq, I assume that's a bearish price pattern that's going to lead to lower prices. And on balance, I believe that's going to happen here. But if the market doesn't do that, if the market dances differently within that structure, so it shows you a head and shoulders, then it starts trading higher, at some point that head and shoulders is a fake out, and it's called a busted price pattern, where it just invalidates what the implication of that chart pattern. So again, very difficult to talk about it in absence of showing you on the charts, but let's see. Renish just joined. Welcome. So Ajik says, do you have a class for baby traders who want to learn about stocks? So Ajik, I do have something called the Master Pattern Trader. This meets every Friday at 11 a.m. It's kind of like just a compilation of everything you've seen, each day live, but I go through all of the markets. So, in these live sessions, I take one or two things, show you what I'm thinking. In the, Master Pattern sessions, I go through all the currencies, gold, oil, stocks, and things of that nature. Gareth just said, should I reload on puts in gold right now? Probably. Yeah, I mean, counter to a lot of people, I've been bearish on gold for a long time. And just like the markets, high interest rates are kryptonite to gold. So, yeah, I do think gold is going to go back down to at least 1650. And we're trading 1728 right now. All right, so I'll just stick around for another few minutes if you have any questions. Otherwise, I kind of recommend you check out my live trading session. The last one is tonight, 4 p.m. Eastern Standard Time. I put the link in the chat box there. And, if you want to understand how I analyze everything, I don't just, pick these trades, out of my shorts. There is a method to the madness, and I've been pretty adept at calling some pretty big trades here. Juan says, do you believe we're about to go into a bear market? It depends how you define that one. I do think there's a possibility of a huge correction here, 20%, 25%. So whatever you want to define that, I do believe we're going to go into a huge correction, and certainly in the Nasdaq, I think people are going to get their teeth kicked in. So I'm short Zoom, ticker symbol ZM. I shorted it around $347. Where's it trading right now? It's trading 323. So I've got $24 profit in that thing. I think it's going to go down another $100 from here. I think it's just starting. So Zoom is just on the neckline of a huge bear price pattern. The neckline is simply a line drawn through the whole pattern. Once it kind of goes through the neckline, it kind of confirms what I'm looking at. And I think there's just huge downside on stocks like Zoom. The way companies are valued are based on their future cash flows. And then you discount those future flows by using a discount mechanism, correlated to the present interest rate. And since the interest rates are going higher and the cash flows are coming down with Zoom because they made all of their money in the pandemic, now as the economy reopens, they're not going to be as robust. And frankly, I don't see how, Google or Microsoft can't do the same thing for free and put Zoom out of business. So, I'm a huge advocate of the short side of Zoom. And been telling our members that for a while. Vincent says, thanks, Marks, for the update during the market session. These are valuable information, and I'm enjoying the Elite Trader program. So the Elite Trader program is, the highest program that we offer, and, gives you everything that I do, the Master Pattern Trader, the Gold Funnel, and everything else. And it's also, you get my daily emails. Farron says, what is the neckline? The neckline is simply a line drawn through the pattern, and I believe it crosses right around here, Farron, around the 330 price level. And it's a long neckline that goes back. I wish I could, there must be a way that I can interact here. I have to figure this out and show you the charts. Yeah, Zoom's today's low is 320. We're 323. And so Bryce wants to know about Shopify. Again, I'd get out of all the Nasdaq stocks right now. I'm sure there's some that you could stay in, but Shopify, yeah, it looks like it has some support here. It's stopped on a support line. Let me see if I'm looking at. Yeah, I think, I see a funky double top, an asymmetric double top, and you forming this right shoulder. And, I think these stocks are going down 20%. DocuSign, the same thing, Vincent. All of these things are just going to get kicked in the teeth. So Thomas says, if you were going to go in the shorts, if you're going to buy puts, if you're going to enter Q. So on the QQQs, it's kind of just, whenever you buy puts, you have to expect a huge move. And so what I do is, it's really not a science. I wish I could say I'm not a maven when it comes to options. Like when the QQQs were trading at 334 on Friday, February 19th, that afternoon, I bought the 320s that were expiring the following week. Now that's a huge move, 334 to 320. So it has to go through your strike price to make money, right? So Nasdaq would have had to have dropped 14 points, or I don't know, at least 7% for me to make money. But I was anticipating that was the top. And if we're at a top, you're looking at a pretty good move. And so some of these things you just, spitball. And, I bought the 320s for $1, which means the underlying is based on 100 shares. So it's $100 per option, per put. And I bought about 700 of those. So that was a $70,000 bet. And then it went to 10. It did drop from 334 to 310 on Tuesday. So the options that I paid 1 for went to 10. So the point is, if you're going to buy options, you have to expect a big move. And the thing is, I usually only buy 1 week ahead because, if you go more weeks ahead, it gets much, much more expensive. And that's probably the right way to go. Like if I'm expecting a huge move in the Nasdaq, which, I kind of am, probably buy, the 295, put sometime in the future, but they're expensive. So, I like these moves where, I can buy something for $1 and they go to 10. Whereas if you buy something further on the future, you're paying 3, 4, 5, and then maybe you'll make 5 on it. Even if it went from 295 to 290, that's just a break even. So it's a very tricky thing, and you kind of have to get in before something turns, before the price really accelerates. And so I just kind of, put something far away. And then, sometimes I just hope that it's going to give my options a scare, that even if it doesn't go there, that if it goes very, quickly in one direction, Monday, Tuesday, those options will get a little scared. Maybe I'll get a chance to just get out, at 2 or 3 times my money instead of 10 times. But so it's a tricky thing I just look at the price, and when I think, Jamel says I'm short Upstart. You must be in a world of hurt then, because I think Upstart is the one thing that's just been going. I think it's up like $60 in the last. Yeah, I would not short that. Hey, Mustafa, good to see you. Yeah, I'm just about to sign off. Mustafa, I'll talk to you in the later session. The Nasdaq broke today. I think this is the start of a big move down. I've been talking about it for a long time. And I think that today, if we get under the lows of 315, it's going to open up a huge move to 310. And if we get out, under 310, then there's nothing to stop it till 300. And I think we're going to get going there pretty quickly. So I expect the next 2 days to be, because what I like is to see the disparity in the price action with the news yesterday. So Powell, gave the most dovish, the most bullish press conference you could ever wish for as a stock trader. He basically said, I'm just giving a green light, I'm never raising interest rates, in your lifetime. No matter what the market says, I'm not even going to react to it. I'm not looking at it. I'm paraphrasing and I'm making, somewhat of a joke. And of course, the market rallied huge on that, because, everyone thought, well, the Fed's got my back. And now you see the market reacting to the pattern. So to me, the pattern is bigger than any person, Jerome Powell. I don't care, who Ben Burnett, whoever it is. I trust the pattern. And the patterns have been telling me that the Nasdaq was broken 3 weeks ago. And I've been shorting these things, and it hasn't been easy the last week or so. I made a bunch of dough 2 weeks ago. And then, I kind of stuck to my guns through this week. It hasn't been easy as prices have just been going higher every day. But I think the chickens are going to come home to roost, and this Nasdaq's going to get punched in the face. What do I think about the price action on pound yen? So I'm peripherally looking at these yen pairs. They're at a, kind of a key inflection point here. There's huge resistance up here, but I'm inherently bullish. There's nothing really to suggest a big turnaround. A big downside. So I think you're going to get a lot of turbulence right here between 150 and 155, but it does look like these yen pairs want to go higher. But frankly, all of my focus right now is in the Nasdaq and gold. That's really all I've been doing for 3 weeks. Oh, good on you, Mustafa. I was worried about you. NXPI. I don't know if I know what that is. I suppose I'll know it when I see it. Oh, of course, the semiconductor. That index looks pretty good. That's in a bull trend. I mean, there's a shortage of semiconductors or whatever. I don't know, but that actually looks pretty good. Made a new high, and would I short Tesla? Probably. Yeah, I think this thing is going back to $300. So we've been boxed up in Tesla 1, 2, 3, 4, 5, 6, 7 days. We've been trading between 660 and 720 for 6 days. So I think whichever way this breaks is going to win. And we had a double top at 900, which to my mind was the guidance pattern. And then we had this uptrending line that has given support to every stock in the Nasdaq, and so we're if we go through that support line now, it's been a long-term, multi-month, multi-year support line, and we bounced off of it at 300 in the triple Qs, went to 323. If we go now and take out that, then there's just air under there, and I think you're going to hit a vacuum. I mean, I am just I've been super bearish for a long time, and prices have just been fighting me but that's the thing about bear markets. The short covering rallies are hellacious, meaning that when they go down, they hit vacuums, and the short covering rallies they take your breath away. Very hard to be short and endure these short covering rallies. But I think that's all the last couple of weeks have been. It's been a dead cat bounce off 300. No insult to pet owners out there. It just means I think it's a false bounce from 300 to 320. And now I think if you take out 300, there's going to be a lot of air under there. Yeah, so Jamila says Tesla forming an inside day. So it's had 6 bars that are inside one another. So I'm looking forward to the lower level of Tesla getting taken out today. Under 6, I think yesterday was 650, and we're trading 675. Zoom's on the low of the day, close to it. All right, guys, I'm going to end it there. If you'd like to understand a little bit more about my methodology, check out that link, thepatterntrader.com/live, 4 p.m. Eastern time tonight. And hopefully I'll see all of you guys there.